Welcome back, traders. Today we begin part 3 of our 4-video series on the 50 most powerful psychology lessons from Mark Douglas. In the first 2 parts, we explored the foundations of uncertainty, probability, emotional neutrality, and the discipline required for consistent execution. Now, we move into a deeper layer of Douglas' teachings, focusing on the behaviors and mental patterns that shape long-term consistency. If you have ever struggled to maintain discipline after a streak of wins, pushed your limits during a frustrating session, or felt pressure when increasing your position size, these lessons will guide you toward a more stable and objective mindset. Douglas teaches that true consistency is built one behavior at a time. The trader you become is defined not by your wins or losses, but by the habits you reinforce every day. In this third part, we examine the psychological structures that protect your discipline, the emotional traps that undermine it, and the mindset shifts that keep you grounded regardless of market conditions. So, if this type of content is valuable to you, remember to like the video, subscribe to the channel, and enable notifications so you don't miss the upcoming lessons. And feel free to share in the comments which topics you would like us to explore in future videos. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to continue producing this kind of educational content. Now we move into the principles and core beliefs Mark Douglas taught. Ideas that shape the mindset of consistently successful traders. Lesson 27. Winning streaks can be dangerous. We talk often about the pain of losing, but winning carries its own risks. After a streak of successful trades, it becomes easy to feel like the market is effortless. You loosen your rules, increase position size, skip confirmations, and drift into carelessness. Douglas teaches that overconfidence is just as dangerous as fear. After a winning streak, return to your baseline. Review your process. Determine whether your wins came from skill or luck. True professionalism is measured by how you behave after both success and failure, not just one of them. Lesson 28. Define your maximum daily risk limit. Do you know when to stop trading? Douglas recommends setting a daily loss limit. This boundary acts as a signal that says, if I reach this number, I walk away for the day with no negotiation. The longer you trade after emotional damage, the worse the decisions become. A daily stop for losses protects both your capital and your mental clarity. It prevents revenge trading and reinforces discipline. Most importantly, it builds trust in yourself because you learn that you will follow your own rules, even when you are frustrated or tempted. Lesson 29. Normalize numbers with mental rehearsal. Many traders perform well with small risk, but collapse emotionally when the amounts increase. Trading $100 per position feels easy, but the moment it becomes $1,000 or $10,000, the mind freezes. Douglas suggests mental rehearsal to normalize these numbers. Visualize taking larger trades calmly. Imagine hitting your stop loss without emotional shock. When your mind becomes familiar with the figures, your behavior becomes consistent regardless of size. This mental conditioning prevents emotional spikes and helps you handle larger capital with the same discipline used at smaller levels. Lesson 30. Focus on execution, not earnings. Douglas says that money is a byproduct. If you chase money, you will chase trades. If you chase process, the money will chase you. Focus on flawless execution, proper risk control, and consistent behavior. Allow the law of large numbers to handle the rest. The best traders do not ask how much they can earn today. They ask how well they followed their plan. Over time, this mindset builds wealth naturally. By mastering your response to uncertainty and detaching from the emotional weight of money, you gain the freedom to trade objectively. Lesson 31. One trade means nothing. A series means everything. Douglas teaches that the outcome of a single trade is random. It does not matter how perfect the setup may look. Even the best strategies lose. The good news is that if your edge is real, it does not need to win every time. It simply needs to win over time. Your job is not to predict the next result. Your job is to execute the plan across many trades and let probability work for you. Think in batches of 20, 50, or 100 trades. This removes emotional pressure from each individual decision. Lesson 32. Stop grading yourself by short-term results. Many traders judge their worth by the outcome of their most recent trade. A win makes them feel brilliant. A loss makes them feel worthless. Douglas explains that this mindset is damaging because it keeps you reactive and emotional. Instead, evaluate your trading by one metric. Did you follow your process? If you did, the trade was good, even if it lost. If you did not, the trade was bad, even if it won. This shift transforms trading into a performance discipline rather than a results chase. Performance is something you can control. Lesson 33. Build habits, not just trades. Consistency does not emerge from luck. It emerges from repeated habits that become automatic over time. Habits such as waiting for confirmation, always using a stop loss, journaling your trades, and stepping away after reaching your loss limit. These small routines create a structure you can rely on. Douglas teaches that you are the system. If you're inconsistent, your strategy will also be inconsistent. Do not search only for the next great setup. Build the disciplined habits that support the setups and elevate the quality of your execution every day. Lesson 34. Detach from being right and attach to being consistent. Many traders fall into the trap of needing to be right. They want validation. They want each trade to prove something. This mindset leads to holding losers too long and breaking rules to chase wins. Douglas teaches that you must replace the need to be right with the need to be consistent. Your ego does not pay your bills. Your edge does. And your edge only works when you follow it every time. Consistency becomes your shield against emotional reactions and keeps you aligned with your long-term probability advantage. Lesson 35. Create a probabilistic mindset. This is the heart of Douglas' teachings. He says that anything can happen and that every moment in the market is unique. There's a random distribution between wins and losses across a series of trades. Anything can happen means no trade is guaranteed. Every moment is unique means the market does not owe you a repeating pattern. Random distribution means losing on a good trade is normal. Once you accept this, you stop trying to predict and start managing your trades objectively. This probabilistic mindset becomes the internal language of successful traders. Lesson 36. Losses are the price of admission. Losses are inevitable. You cannot avoid them, and fearing them only increases the damage they cause. Douglas reframes losses as the cost of doing business. You pay small, controlled losses to remain in the game. A store pays rent. A pilot experiences turbulence. A trader pays losses to access long-term opportunity. When you accept this truth, your emotional resistance fades, and consistency becomes easier. You stop fighting the nature of the market and start working with it, allowing your edge to function without unnecessary emotional interference. Lesson 37. Control what you can and release what you cannot. You cannot control whether this trade wins. You cannot control the next move of the market, but you can control your position size, your stop loss, your risk limit, and your decision to follow your rules. Douglas teaches that true power in trading comes from focusing on what you can control. That is where discipline becomes your edge. When you anchor yourself in controllable actions, the behavior becomes steady, and the results reflect that stability. This mindset frees you from trying to force outcomes and redirects your energy toward consistent execution. Lesson 38. Measure progress by execution, not profits. Many traders believe that making money means they traded well, but profits are inconsistent. You can make money by luck or lose money due to randomness. Douglas teaches you to measure success through your behavior. Did you follow your plan? Did you avoid trades outside your setup? Did you stay disciplined despite the emotional pressure? These questions lead to genuine growth. Growth forms consistency. Consistency produces long-term profits. When you evaluate yourself by execution instead of earnings, you build a foundation that lasts regardless of short-term fluctuations. Lesson 39. Journal the process, not just the result. A consistent trader is always a self-aware trader. Keep a journal not only of your trades, but also of your mindset. Record why you entered, how you felt, and whether you followed your rules. This creates a feedback loop that reveals patterns. You begin noticing impulsive tendencies, emotional triggers, and strengths you can reinforce. Your journal becomes a mirror that shows who you are as a trader. True consistency starts with understanding yourself and refining your behavior through honest reflection and structured review. And with these lessons, we close part 3 of this 4-video series on Mark Douglas and the psychology behind consistent trading. These ideas strengthen the base you have built so far by showing how discipline guides execution, protects your mindset, and adds stability to every decision you make. In the next video, we will continue exploring the principles that refine your behavior, reinforce emotional control, and help you trade with the confidence and consistency of a true professional. So, trader, if this video helped you gain more clarity, make sure to like the video, subscribe to the channel, and turn on notifications so you do not miss the next lessons. And let me know in the comments which topics you would like us to explore in future videos. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the Controllable Trader community right here on YouTube. It's a simple way to support the channel and a smart investment in your growth as a trader. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to keep producing this kind of educational content. Please also remember that the mission of the Controllable channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you will find complete courses designed as a true trading masterclass. We teach liquidity, market structure, higher time frame analysis, and supply and demand, always focused on understanding price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency, because trading is not just about charts. It is about mindset, discipline, and execution over time. Our main courses include Smart Money Concepts, ICT, Technical Analysis, Trading Psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you better understand how markets really behave. Thanks for watching, and I will see you in the next video.